Hey, what's up, everyone? Welcome back to Stocks Telegraph, your go-to place for the latest updates and insights into the stock market. If you're looking for the lowdown on the hottest stocks, you're in the right spot. Today, we're diving deep into Supermicro Computer Incorporated, ticker symbol SMCI. If you haven't been following this stock, you're definitely missing out because they've been making some serious waves in the tech world. Whether you're a seasoned investor or just getting started, understanding SMCI's growth, performance, and future outlook could help you make some informed decisions. So grab a snack, get comfy, and let's break it all down. And before we dive in, make sure you hit that subscribe button so you never miss an update from us. Don't forget to like the video, share it with your friends, and let us know your thoughts in the comments below. All right, first things first, let's talk about the numbers. As of today, SMCI is sitting at around $32.23 per share. Now, when we look at analysts' recommendations, they're giving it a neutral outlook with a mean rating of 3.00. That's not a buy, not a sell, but here's the kicker. If we zoom in on the stock's performance, things get a lot more interesting. Year to date, SMCI is up a solid 13.38%. That's nothing to sneeze at, especially when you consider the broader market. But wait, check this out. Over the past month, SMCI has soared by a huge 49.63%. Yeah, you heard that right. It's been on fire lately, and it's definitely one of the standout performers in tech right now. However, when you look at SMCI's 52-week high, we're still down by about 73.78%. That's a pretty big gap, which could mean there's plenty of room for growth if the company can get its act together. So, there's definitely potential here. Now let's talk profitability, because that's where things get even more impressive. SMCI's return on investment over the last 12 months is sitting at a strong 16.68%. This is a good indicator that the company knows how to use its capital effectively. And then we've got a gross margin of 14.33% and a profit margin of 8.09%. Not bad, right? These figures show that Supermicro is making money and turning a profit, which is always a good sign. Looking ahead, the earnings outlook is bright, with analysts predicting a 28.85% increase in earnings per share this year and another 24.73% next year. That's some solid growth momentum. On top of that, SMCI has a low debt-to-equity ratio of 0.40. That means they're not overly leveraged, which is great, especially in these uncertain times. So in terms of financial health, things are looking pretty strong. But the financials are only part of the story. Let's talk about what's really driving SMCI forward, its involvement in the AI boom. And when we're talking AI, we're talking big. Supermicro is making some major moves in the artificial intelligence space, and that's where things get really exciting. Just recently, CEO Charles Liang tweeted about Supermicro's collaboration with xAI, which is Elon Musk's AI venture. Supermicro is going to be supporting xAI's expansion of its Colossus supercomputer in Memphis, and we're talking about over 1 million GPUs being integrated into this thing. Yeah, it's as massive as it sounds. This partnership is huge because it places Supermicro right in the middle of the AI gold rush. They're using their optimized data center building blocks and ambient temperature, direct liquid cooling technology to help cut down on the energy consumption of data centers. That's huge for the planet and also for companies looking to cut costs. So not only are they riding the AI wave, they're making it greener and more efficient too. Plus, Supermicro is working closely with NVIDIA, which has been another big boost for the company. With AI workloads exploding, SMCI is in a prime position to capture a massive chunk of the market. Now, no company's journey is without bumps in the road, and Supermicro has definitely had its share of challenges this year. Earlier in 2024, SMCI's stocks skyrocketed by over 300%, thanks to the demand for AI infrastructure and its partnership with NVIDIA. But things quickly took a turn. In August, Hindenburg Research, the short seller, came out with a report accusing Supermicro of accounting malpractice. That dropped the stock by 19%. And if that wasn't enough, the company announced they'd be delaying their 10K filing with the SEC. Investors got nervous and the stock tanked. But wait, there's more. The US Department of Justice started investigating the company's accounting practices, and then Supermicro received a delisting notice from NASDAQ for not meeting their listing requirements. And as if that wasn't enough, Ernst & Young, their longtime auditor, resigned, leaving even more questions hanging over the company. On top of all that, Nvidia, one of Supermicro's largest customers, started redirecting some of its Blackwell order flow away from Supermicro. So yeah, things got pretty shaky for a while. But here's the thing, Supermicro isn't backing down. They've taken steps to address these issues head-on. In November, they brought in a new auditor, BDO USA, to replace Ernst & Young, and they've been working on a compliance plan to avoid being delisted from NASDAQ. Fast forward to early December, and we got some good news. NASDAQ gave Supermicro an extension to remain listed until February 2025, buying them some much-needed time to get everything back on track. Plus, their internal investigation revealed that the resignation of Ernst & Young wasn't due to any financial misconduct. That's a step in the right direction for restoring investor confidence. While things haven't been easy, Supermicro is clearly taking action, and with the AI market still booming, they're in a great position to bounce back. So in conclusion, Supermicro Computer has had a pretty wild ride this year. From soaring stock prices to a dramatic fall due to accounting allegations and investigations, it's been a roller coaster for sure, but they're not out yet. They're taking steps to address their issues, and with AI continuing to expand rapidly, there's still a lot of potential here. If Supermicro can clean up its accounting issues and keep riding the AI wave, they could be looking at some serious growth in the future. So, if you're looking at SMCI, keep an eye on how they handle these challenges. They've got the right tech and the right partnerships to make a comeback. That's it for today's breakdown of Supermicro Computer. We hope you found this video helpful. If you want to stay updated on SMCI or any other stock trends, don't forget to hit that subscribe button, like the video, and share it with your friends. We'd love to hear your thoughts. Do you think SMCI can bounce back, or is it a stock to avoid? Drop your comments below. Thanks for watching, and as always, stay informed and invest wisely.